The views expressed in this video presentation are my opinions and not necessarily the opinions of guests and others sharing or reposting this video. The content is produced only for educational and informational purposes. Do not regard any statements in this video as a recommendation to buy or sell any financial instrument. Investing comes with risk to loss of principal. Always conduct your own research and seek guidance from a professional investment advisor. I am not a professional investment advisor. I'm Dollar Will. And we're going to talk a little S&P today. A little S&P 500. Let me get my chart together here. You say, why don't you edit this? Because it takes time. Okay? I don't want to do it. Because I'm a trader for real. Okay? I got stuff to do. All right. Let's go in a little bit here. Okay. I am a practitioner of Elliott wave theory. So we count waves, and I teach how to count waves on my Patreon and stuff. What I do on this channel is from time to time provide chart updates of the S&P 500, since that's what our retirement account is tied to. And I'm starting to, post a few other things from time to time, little crypto, and I expect to come back soon to report to do a chart update on cannabis. Okay. All right. So what we got here, we of course, going back in time, we had this massive decline. It scared everybody, or most. I don't like saying everybody. Back in February of 2020. And we had a very strong run, very strong. Typically, when you've come off of a bottom like this, you come back down and retest it, meaning you revisit that low. You come in the area of that low and without going lower and then go higher. So we had more or less a V bottom. We came down to the bottom and we sprang right back up. So I was really expecting that we would come back down and retest this, but it didn't happen. So what we do in technical analysis, yes, we may have our opinion, but we follow what's called price action, the way that the prices move on the charts and their rules. And it's I can't like simplify it and tell you in 30 seconds. Okay, so there is an analysis part. That's hence the term technical analysis. There it's like a doctor will try to figure out what's wrong with you. He'll try one thing, test one thing, and then that'll be wrong. And so through the process of elimination, he or she will come, the doctor will come down with a more accurate judgment on about what your illness is and what type of treatment you need. Well, it's the same kind of deductive process with chart action. The doctor starts with a base of knowledge, and we start with the base of knowledge, but that base of knowledge can point to different directions. And the same thing happens with technical analysis. So when you see me or others putting up charts and then the price will do something and we'll change the forecast, we're still working from within a base of knowledge based on how prices move and what's most probable. Okay, so that's what's going on here. What we see structurally here is the price is trading in a nice channel. Okay, a diagonal channel going up. Let's see, you can kind of see here a nice neat little channel. And from the video a month ago, it might be good to go back and look at. It's been a while, maybe it's been a month since I did a video. Go check that out and look at what I was saying then about this decline, because we have run a while and we are due for a let me kind of move this out the way. I don't need that. We are due for a big correction. And these down moves are called corrections, okay? But if you look back on the video a month ago, I was saying that we would have a shallow decline like this because it creates the structure, and that so technical analysis is what I was speaking from my understanding of technical analysis and price action. That's where I was drawing that from. If you'd like to learn more about that body of information, which I can't tell you in 5 or 10 minutes, it's some stuff you have to learn and some stuff you have to watch over time. You have to see it over time to know that it's true, that it's real. It goes against your logic and what you naturally probably think, but once you learn this, you'll be able to turn on the television, you'll watch the market technicians break down a chart, and you'll already pretty much know what they're going to say. So you'll be clued in, and you'll be able to protect yourself a whole lot better. So what we have here is what I call this. We call this a wave 1, a wave 2, and then we have a big, huge wave 3. And within wave 3, let's see, I would call this wave 1, 2, 3, 4 within wave 3. So we have 5 waves within every major wave. Okay. And so I would call this 4 within 3. The good news about this decline is we broke out of it. That's what the breakout above this green line is. We broke out of it. That's good. Let me just obsess over this a little bit. Let me take that off too. I don't need that. Okay, so we broke out of it. That's good. And then another good thing that happened is we made a higher high, which is also good. Prices, when they go up, they make higher highs. So this was the former high. And we went above it, which is good. Now, in the short term, I think we're going to come down a little more, a trivial amount more, not enough so much that it would be of concern to anyone other than, say, a day trader. Okay. And no shade on day traders. I'm a day trader as well. So we do both. Stop talking badly about day traders. We have retirement accounts, and we have different accounts that we just want to make a little money, want to make basically a salary. Okay. So that's what day trading is for. So we have 2 different approaches. Okay. We have a long-term approach for our retirement account, and then we'll have another shorter term approach for our for the day trading account. I'm sorry. All right. So what we have in Elliott wave theory, when prices retrace, they do ABC pattern. So I think we're gonna have just a minor move, maybe come down to about here, make a nice little zigzag pattern, come down to this void, this area here between this low and this high and this little void. We're likely going to come down there. So that could end up being 1 or 2 hour chart. That could be a couple of days, maybe, I don't know, Wednesday or something like that. So this would be only important really for long-term traders. It means nothing. So it's great news. Your retirement account, your S&P is, likely going to go higher. But in the near term, meaning of the next few days, we could see some downward pressure coming down here. And so this downward move, this sequence, this series of lower highs, candles, is going to continue. And this is, again, a 2 hour chart. It's going to continue to this area here. And so as a day trader, This is important to me. So I'll be trading. Let me see. This. We call this price action. This price action. This little trend. The price doing this. And over the next few days. And that's how I'm gonna get my daily bread. It keeps me from dipping into my long-term account. Okay. I'm a full-time trader, y'all. Full-time traders got to eat every day. So long-term accounts. When I became a full-time trader, I realized, hey, wait a minute, I like the way my long-term account is going, but I can't keep picking off of it to eat. you know, I gotta eat every day. So I became, I guess, more of a shorter term swing trader. I might hold something for a couple of weeks, and that's fine. That works real good too. But now I'm going to make the trend. I'm adding to the arsenal. Okay, it's not an either or. It's a this and. I'm adding to the arsenal day trading. Because there's a lot of money out there in firms to pay people who have that skill. So why not sell it? Capitalism. All right. So here we go. We got to pull back here. And so what we have after this big decline, we had a breakout and we got a nice channel going. I think it's going to look more like this. Nice little channel going. We'll see. I'm sorry, this is messed up. This is annoying. All right. Get this mess off of here. We got a nice little channel forming, and we're going to run. Like I said, the good news is we made the higher high. And we're going to have a minor little pullback. And then we're going to continue going higher in another channel. Let's see. Come on, draw. We're going to have another channel, kind of like that, kind of narrow channel. It's going to take us all the way up to, wow, that's a good, that's a good little move. Make this smaller. Okay, this blue line here first. This area of, okay, hold on. This 50-30 area. We're going to have a pretty serious down move once we get there. But in my opinion, we're going to trade in the channel that's going to take us possibly through the end of the year. So into year 2020, I believe we're going to stay in this channel and have take the S&P to continue this run of the historic rise of the S&P 500. I think that's what's going to happen. And then we're going to have a pretty nasty pullback once we get into next year. But again, like I said in the beginning, we make these projections, but it gets refined as we get closer to it in time. Okay. It's like watching Wheel of Fortune. As more vowels get turned over, you see more of the answer, and then you start to eliminate certain options in your mind, and then at some point you are really sure what you think the word is. You're right. You're exactly right about what the word is. As more vowels get turned over, or putting together a puzzle, the more pieces to start to fit together. Before you're done with it, you kind of know what it is. You know where everything goes. And so technical analysis is like that, but you have to learn the rules first. Okay. So again, we're working from a framework of information that you can learn. And so once we get here, and I believe we should get here into somewhere in January of 2022. As we get closer, like I said with the puzzle, my target date will get narrower. Okay, because the structure will fill in moves. This price action will happen. These waves will come in, and I'll be able to count them and measure them and project approximately where it's going to end. So what does approximately mean? Definitely, we not talk about being a month off. We're talking about being, within a week, something like that, within a week or two, something there like that. That's accurate enough for me. So technical analysis will be able to allow you to highlight or designate a target area. That's not an exact number, a target area, and a target time. Okay, that's all you need to know. That's enough information to know to get out of the way. You don't have to know the exact day and the exact price. You just really need an approximate price to know where that trouble area is, so you can then make a decision what you want to do. So when people say no one can project the top, the high, or the low, I laugh when I hear that. Technical analysis is over 100 years old. So when I hear someone make that statement, I know that they don't know anything about it. They know nothing about it. So they think that what they know is all there is to know. And it's really kind of sad that a discipline like technical analysis, it's been around for over 100 years. Let me say about. Let me add this up. Is it 100 years? Yeah. Wow. Yeah, it's over 100 years. Yeah. Technical analysis. One of the quote fathers of it. One was Charles Dow, the Dow Jones Industrial Average. It's part of Dow theory. Okay, so it's old. It's not anything new, and it's been many others have contributed to it. So it's an evolving thing, and it's got trade associations, membership associations, a major one in America and a major one in Europe. And so it's not a new thing. So I'm amazed when I hear people say, you can't nobody can pick the top. Well, does that mean that nobody knows nothing? No one knows anything? What are they really trying to say? It's just humorous. It's like they don't know what they don't know. But anyway, so once we get up here, I think I'm going to run like hell, because we're going to have a pretty serious decline. Pretty serious. And there's an outside chance that the decline could be even worse than what I'm expecting. Because when you start talking about prices being at historic highs, the S&P 500 and Dow, this is the highest it's ever been. It's been on record. This bull run we've been in since 2009 is the longest bull run that on record, that we know of. So when you come to critical areas where prices are expected to make a decline, I'm going to assume that my wave count is wrong, and that it could fall even further. So I would not. I'm gonna treat this price area like the end of the world when we get here, and then I'll just rely on price action to show when when I see bullishness return, and when the bad news is over. So that's the way I'm going to approach it. But I'm sorry for dragging on in this video. Um, that's the way I see it. We got next few days, a little, a couple of days of down, maybe 1 or 2 days, maybe Wednesday probably at the latest, and then we're going to continue to party, and we're going to end this year out prosperously, irrespective of what goes on with the P word, the C19. Markets don't care about that. They really don't. I know that sounds crazy, but come to my channel, I can prove it. I'll take you through 100 years of history and show you technical analysis showing what prices, as you learn the rules, you'll be able to apply it. And you'll say that this is what the technical analysis says the price would do. And the price continued to make the structured moves outlined in, say, Elliott wave theory. That's my particular branch of technical analysis, where that I use to make these price projections. I can take you through 100 years of history to show, or at least back to the Great Depression forward, and show you that the methodology predicted where prices would go, and the world wars didn't stop prices from going where they're projected, where the theory projected prices would go. Not the World Trade Center incident, nothing. Okay, we are pack animals as humans, and there's something in there's a psychology in how we move together, and how we make these prices move on these charts, because this price action is a reflection of of our psychology. Okay, there's a lot baked into this over time, over generations. Okay, and I can show you. That's what these oscillators are for. To show you money moving from one space to another at points that are somewhat or largely predictable. So that's technical analysis. Thank you, and I'll be back at some point soon. I don't think we're talking days. We're probably talking hours to post another video about cannabis. So have a good weekend.